Hello everyone, this is Anuj Sethi and welcome back to another video by AMS Group of Institutes. Now today's video is part of a series called Accounting for Shares. So if you guys are new, then please hit the subscribe button and press the bell icon so that you will get a notification whenever we come up with another video. Now today's topic is share forfeiture. What is forfeiture of shares and how do you account for it? We will see in today's video. So, before we move forward with the accounting, let's see what is share forfeiture. Share forfeiture is the confiscation of those shares for which the amount has not been received by the company, that is, the defaulting party's shares. These are confiscated by the company for non-payment of the amount called by the company. So, let's move forward. Firstly, what are the accounts involved? The accounts involved in this are, as you can see on the screen behind me, the share capital, the unpaid calls and the share forfeiture. Share capital is involved because since you are confiscating the shares, you will have to cancel these shares. So you will reverse the share capital. The unpaid calls. You also have to reverse the unpaid calls because we have seen in the earlier videos that you have to capitalize these calls. So whenever you're cancelling these shares, you will have to reverse the calls as well. And the share forfeiture. Now this is very important for the company. You can say that this is the profit which the company earns when they are confiscating the shares. Now how are they earning a profit? Whenever they confiscate any shares, the company will not refund any amount which they have received for the earlier installments. So let's take an example. Suppose a person, he has not paid the last call, final call. He has paid the application money, the allotment money and the first call. But since he has not paid the second and final call, we confiscated the shares. Now when the company confiscates these shares, they will not refund the money for the application, the allotment and the first call received. So this amount is a profit which the company will earn when they are confiscating these shares. So this amount is known as share forfeiture. So there are three accounts involved in the share forfeiture entry. First is the share capital which has to be reversed, the unpaid calls which also have to be reversed and the share forfeiture which is the profit on forfeiture of shares. So let's move forward. Now before we go into the actual accounting, there are two ways in which we can account for share forfeiture. First is by not using call in arrears, and the second one is by using call in arrears account. It will depend upon the situation given to you in the question. Today we will discuss how will you do the share forfeiture entry in case no call in arrear account is being used. Now how to record call in arrears without actually using the call in arrears, we have seen this in a previous video. So all those people who have missed it, kindly go to the channel and you can see that link. So let's move forward with the question. AMS Limited has issued 1 lakh shares rupees 10 each. Then we have been given the installments. First we have the application 3 rupees, the allotment 2 rupees, first call 3 rupees and the second and final call of 2 rupees. Here we have some extra information. Mr. A, having 10,000 shares, failed to pay the first call and the second and final call, and because of this his shares were forfeited after the final call. So after the final call, this is very important. Now why so? I will explain it in other videos. So we'll underline this. It is after the final call. Plus there is a default in the first call and the second and final call. So we can underline that as well. And one step which I always suggest to my students is mark those places where there are any adjustments. So in this, he has defaulted in the first call and the second and final call. So we will mark these places. The first call, let's use the hashtag, and the second and final call. You can use any other mark depending upon your choice. Make sure it is a unique mark. So let's move forward with the journal entries. Firstly, we will have the journal entry for receiving the applications. Now whenever you're receiving the applications, the entry will be bank account debit to share application account credit. The amount will be 1 lakh shares multiplied by 3 rupees the application money. So bank debited by 3 lakh rupees and the share application credited by again 3 lakh rupees. Now since there is no pro rata allotment and no rejection of shares, we will capitalize the whole application amount, and the entry for that will be share application account debit to share capital for the full 3 lakh rupees. So share application debited by again 3 lakh rupees and the share capital credited by 3 lakh rupees. Let's move forward with the next installment, that is the allotment. Now mind you, in the allotment a trend starts. The allotment first call and second and final call. That is, firstly we will capitalize these calls and then we will do the payment entry. So first we will capitalize the share allotment amount. The entry will be share allotment account debit to share capital and the amount will be 1 lakh shares multiplied by 2 rupees the allotment call. So that is 2 lakh rupees. The share allotment debited by 2 lakh rupees and the share capital credited again by 2 lakh rupees. Let's move to the payment entry. Now in this there is no default, so we will fully receive the allotment money, that is 2 lakh rupees. So the entry will be bank account debit to share allotment account credit 2 lakh rupees. So bank debited by 2 lakh rupees and the share allotment credited by 2 lakh rupees. Next we'll move forward to the first call. Now mind you, in the first call there was a default. So let's see how will you account for that. Following the trend, firstly we will capitalize the first call. The entry will be first call account debit to the share capital and the amount will be 1 lakh shares multiplied by 3 rupees, the first call amount. So it is 3 lakh rupees. First call debited by 3 lakh rupees and the share capital credited by 3 lakh rupees. Now mind you, in this we are not using the call in arrears account. So we will pass the journal entry for only that amount which we have received. Now what was the default? Mr. A having 10,000 shares, he failed to pay the first call. The first call was for 3 rupees. So he has not paid 30,000 rupees. So we will receive only the balance amount in our account, that is 2,70,000 rupees. So the entry will be bank account debit to the first call, 2,70,000 rupees. So bank again debited by 2,70,000 rupees and the first call credited by 2,70,000 rupees. Now we'll move to the second call, the second and final call. Over here, firstly again following the trend, we will capitalize. So the entry will be second call account debit to share capital and the amount will be 1 lakh shares multiplied by 2 rupees, that is the second call amount. It is 2 lakh rupees. So 2 lakh rupees second call debited and 2 lakh rupees share capital credited. Now mind you, again there is a default in this. So we will receive only the balance amount because we are not using the call in arrears account. So what is the amount which we will receive? It is the default amount and we have to subtract the default amount by the overall called up capital. The called up second call was 2 lakhs. The default is 10,000 shares multiplied by 2 rupees the second call. So that is 20,000 rupees. So we will receive only the balance amount, that is 1,80,000 rupees. So 1,80,000 bank debited and 1,80,000 second and final call credited. I would like to remind you the accounts which were involved. It was share capital, the unpaid calls and the share forfeiture. So whenever we have capitalize these amounts, that is the first call, the second and final call, the allotment or the application, share capital was always credited. So whenever we are reversing it, share capital will be debited. So let's see in the entry, share capital is being debited. Next we have the unpaid calls. Now whenever we are capitalizing, all the calls were debited. First call account debit to share capital, second and final call account debit to share capital. So whenever we are reversing these calls, we will have to credit these unpaid calls. Now since there is no call in arrears account, we will credit the name of those entries, that is the first call and the second and final call. So the next two accounts will be credited, that is first call account and the second and final call account. Now what have we seen? That share forfeiture is a profit and profits have a credit balance. So share forfeiture will be credited. If you don't like this, so you can also think of it in a way that share forfeiture is the balancing figure of this entry. So let's move forward with the calculations of how you will actually come up with the amount. So firstly, let's make a working note. We are forfeiting 10,000 shares. So 10,000 shares. Now what is the capital amount which we will reverse? Now mind you, we had underlined one thing in the question, that is we are forfeiting after the final call. Now since we are forfeiting after the final call, that means we have called up the full nominal value or the face value of the shares, which was 10 rupees. So we can say that full 10 rupees has been transferred to share capital account. So if we are confiscating the shares, we will have to reverse the full 10 rupees. So in the share capital, we will add 10 rupees. So let's go in the share capital, rupees 10 per share. Now how many shares are there? There are 10,000 shares which are being forfeited. So share capital will be reversed by 1 lakh rupees. Now how do you get this amount? Rupees 10 multiplied by the number of shares being forfeited. So this will come out to rupees 1 lakh. So in the share capital, the amount which will be debited is 1 lakh rupees. Next we'll move on to the calls, that is the first call and the second and final call. So let's go. In the first call, when you're reversing, what was the amount? It was 3 rupees. And what is the amount which we haven't received? We didn't receive 3 rupees on these 10,000 shares. So the amount which we will reverse in the first call will be, first call, it is 3 rupees for 10,000 shares. So this total will come out to rupees 30,000. So in the first call, whenever we are reversing the first call, we will credit it by 30,000 rupees. Next we'll move forward to the second and final call. Yes, the method will remain the same. That is the second and final call amount multiplied by the number of shares which are being forfeited. So the second call was for rupees 2 and the number of shares which we are forfeiting is 10,000. So we will credit 20,000 rupees in the second call amount. So there we have the amount. So let's move forward with the entry. We have already discussed the entry, so I will directly write the amounts. Share capital will be debited by 1 lakh rupees. 1 lakh. The first call will be credited by 30,000 rupees. So 30,000. The second call and the final call, second and final call will be credited by 20,000 rupees. We have calculated this as well. And the balance amount will go in share forfeiture. So what is the balance amount? 1 lakh minus 50,000. So share forfeiture will be credited by 50,000 rupees. 50,000. So this is how you will account for share forfeiture if the company is not using call in arrears account. So this is it for today's video. If you found this video to be useful, then please give it a thumbs up and share this link with the fellow peers and students. If you want us to make another video on any other topic, then please use the comment section below. We have also started online classes for commerce, science and MBA subjects. So all those people who are interested can contact us by emailing us at amsgroupofinstitutes@gmail.com. There are no spaces. Please like, share, comment and subscribe to the channel. And as always, happy learning.